David, it's great to have you back. I am curious about your thoughts about, say, Europe versus U.S. We've had some recession calls on Europe pulled because of the surprising strength we've seen. Is it by far your favorite?
Well, when you look at valuations, and as long-term value investors, this is exactly what we do. And the hunt for value really does begin in Europe because the market sold off quite aggressively last year. And by the time the European market, that is, especially with the war concerns and energy prices and the fact that the European economy is more attached to China than the U.S. economy. So all these factors weighed on European share prices. But a funny thing happened. The share prices went down, but earnings kept going up. And so that opened up this value gap. And so by the time we get to the end of 2022, we see European equities roughly at around 10 times earnings, U.S. equities at about 17, 18 times earnings, and forward earnings growth for 2023 is projected to be higher in Europe than in the U.S. So absolutely, this is exactly where we're finding opportunity because the companies keep earning money, and now we've seen energy prices plunge in Europe, the Chinese economy reopening. So I think, for the most part, we're going to see more than acceptable growth in Europe. And plus, you have these very low valuations, which means that companies will continue to increase profit growth, cash flow growth, and distributions to owners.
Right. Some would argue that the indices, let's take the DAX, are beginning to reflect some of those positive surprises. There's the added worry that there'll be a new aggressive push on both sides in Ukraine come spring, that gas storage in Germany next winter may not be as lucky as it was this winter if the weather doesn't cooperate like it did. How do you process some of those concerns?
Yeah, I think the fact that these European multinational companies, and let's keep in mind that these companies are based in Europe, but they do business all over the world. So one of the big mistakes investors make is, oh, it's a European company. There's a war going on in Ukraine. Therefore, we can't own Europe. Instead of looking at it that way, one has to analyze and examine where companies earn their money. And you take these big European companies, whether they be the luxury good companies or the pharmaceutical companies or companies like Siemens and Daimler Truck and Mercedes and BMW. They do business all over the world. And they sell at these huge valuation gap between where they should based on cash flow yields because people are afraid of these macro forces. There very well may be an acceleration in the war in Ukraine, but what we saw last year was that these companies were able to overcome these challenges and still grow cash flow and profit streams.
So, David, let's name some names here. What do you like here at these levels? And have you been rethinking some of your investments? Have you been buying into certain names here to start the year, given the thesis you just laid out?
Well, as you know, we're gradualists. We slowly ease into companies as they meet our criteria, and we slowly exit them. And we're still significantly overweight in European financials because you have literally a triple positive happening there. Rising interest rates, finally. Remember, Europe was negative rates, which meant lower for longer and the inability to generate good income growth. They still generated growth, but it was low single digit instead of mid to high single digit. At the same time, you have this improving European economy, which means credit costs should be subdued. And lastly, the capital positions of these companies. Today, BNP reported their earnings very strong, and they sold Bank of West at 1 3/4 book and are going to buy back their own stock at 70% a book. And so this is the type of value accretive activity we're seeing in European financials. Just about every one of the major European financials is overcapitalized and distributing that money back to shareholders. So to me, this is one of the areas, BNP, Intesa Sao Paulo, Allianz. These are some of the blue chip names, Lloyds Bank in the United Kingdom, where you see this most acute value, as well as the industrial sector. Company like Mercedes, BMW, Daimler Truck.